Welcome back to another trade recap. I've literally just been backtesting all day. You guys aren't gonna see all of it. It's really just a shit fest, bro. Yeah, it's really a shit fest. I'm like struggling right now, dead ass. With that being said, what am I working on right now to improve my trading? So one thing I realized is that I pretty much do know the model, and I think I know it pretty well. I think the issue that I'm running into right now is that I need to do more filtering in terms of what to do during certain situations and how to handle like certain protocol for certain situations that may arise, like for example, should I just start from the top down and then go over my protocol? Let's do that. So let's go to the daily. And today is a Friday, right? So I'm thinking TGIF, right? So coming back into the range on Friday, typically. Now, why would I think that? Well, Monday, put in the low, and we kind of just been up, right? Tuesday here, put in the low. So we have an SMT here. So this is definitely the low of week. And then we just been up. Now, why would I want to trade back into the range on Friday? Because we just, we've been expanding all week, and we just took out relevant highs here and here. So it's logical to think that we would come back into the range, right? So as you can see, I marked out this high. I was thinking, okay, well, if we're coming back into the range, we could realistically target the CE or consequent or the equilibrium of this price leg here. Not that it would come back down here during this Friday. That would be a huge move. But I'm just saying, like, realistically, what would we be targeting if we wanted to go to the downside equilibrium? So that's what I was looking at there. Then going to the 4 hour, as usual, we mark out our 1800 candle and our 600 candle. What are we looking for on the 4 hour? We are trying to determine whether a relevant low or high of day has been put in, right? Coming into the 4 hour on this, I did recognize that we actually had SMTs at the lows, but you have to also take into consideration what makes more sense. What is the narrative here? You can have SMTs that might not even matter to what the overall narrative of what price is trying to tell you, right? It makes sense that we go lower, not higher, because it's a Friday. 1, we took out a relevant high. 2, we actually have SMTs at the high. 3, now if you compare your bearish confluences to your bullish confluences, which one makes the more sense? Bearish confluences, right? So I was definitely more bearish, but that's basically what we can see from the 4 hour. So then going down to the 1 hour, just a little bit more zoomed in version of the 4 hour. So typically I just glance over the 4 hour, try to see what I can identify. And then when on the 1 hour, I just basically take that and I just do a closer look at what it is. Like, for example, I identified that we had a SMT on the 4 hour. Now I just basically look at it on the 1 hour, just to try and see what we're dealing with here. So this is that SMT here, but I was like, okay, well, in the grand scheme of things, that doesn't make any sense. Plus, we have relative equal highs here. And then coming into 9:30 open, right, we already had put in this high previously. Now, if I want to trade lower, I need to see an SMT of some sort, right? I need to see an SMT because we're at the very high of the day. I need something really significant to tell me that, hey, we're going down lower. Plus we also did have these sweeps here. So, hey, nice. Had these sweeps as well. So that's relevant, as you can see. Let's put in, I don't have it here. I was just gonna put liquidity sweep, like actually put it there, but don't have a thing here for it. With that being said, SMT at the highs. Now, what am I looking for after that? After I've determined that I have SMT at the highs, that's typically what I look for on the 1 hour. I typically look for that 1 hour SMT to be put in, and then also a fractal model. I don't typically rely too much on the 1 hour for looking at the fractal, but you can see that, hey, coming into the 9, we are coming back into the range. So this is a C2 closure here, and we have this SMT. So not only do we have a 1 hour fractal model plus an SMT, right? This is very like, okay, cool, great. So after that, I'm going down to the 30-minute or the 50-minute, whichever one, and seeing if I have another fractal model. We do. We have a 30-minute C2 right here. and on both NAS and ES. Yes. And then I kind of just, so I believe I was originally looking on the 15, but the 15 was a little bit confusing. So I just zoomed out. So the 30 and 30 minute was like, sure enough, great. Now, okay, so now that I have my fractal model and my SMT, what am I looking for now, right? Typically an entry, right? But here's my rule. Here's the filtering that really makes a difference between a losing trade and a winning trade, and potentially staying out of a trade that could be a losing trade. I'm not allowed to take the first change in state of delivery. I have to take a continuation if we are putting in the high of day. If we are moving away from an established high or low of the day, then we can take the first change in state of delivery. But in this case, we are putting in the high of the day, so I'm not allowed to take the first one. The first one would have been roughly here. Once we close below, but it doesn't even matter because we didn't even close below here. But now that we went really low, you would have had a huge stop. You could have, if you wanted to take the first CISD, you could have, but now you'd have a huge stop if you take it on NASDAQ. If you took it on ES, not so much, you would have been fine. But you really want to wait for that continuation confluence. Otherwise, you are more likely than not going to get stopped out, because we can do multiple manipulations, right? So you want to wait for a continuation confluence, because you never know when the true high of day is going to put in, because you could take this trade, but it might not be the true high of day. We might end up manipulating it again, and you'll see that all the time, that we have multiple manipulations if we're putting in the high or low of day. So you want to typically take the second change in state of delivery, because that will be more high probability that you won't get stopped out, right? Now, I was initially going to take this on, was it ES? No, I was definitely going to take this on NASDAQ, but I was waiting for a pullback on ES. I never got that. But we got the pullback on NASDAQ. Now, I was a little iffy about this trade because we had already taken out this drawn liquidity here on ES. We still had a little bit more on NASDAQ, so that is why I actually decided to enter this on NASDAQ, because our objective hadn't necessarily been met on NASDAQ, right? So that's why I took this on NASDAQ. And yeah, I honestly think the biggest thing that I really just wanted to talk about was that I do know the strategy. I think the biggest thing is just filtering out trades more, having certain criteria of what to do in certain situations, and this is definitely one of them. Taking the second change in state of delivery / continuation confluence if we are putting in the high or low of day. Now, what other filtering rules do I have? Well, if we are tapping in, like, let's say we want to go short, or we want to go long. Let's just use a long example. If we want to go long, but let's say we want to go long on NASDAQ, but ES is tapping into a relevant level. Let's say we're down here and we want to go up to this high here. Let's say the situation was flipped and we wanted to go bullish to this high. If, for example, ES taps into this high first and we are down here for whatever reason, I can no longer go bullish, right? I have to wait to see if price wants to continue to go higher at that point. And not only that, I think it's also relevant if we have something to target, because if we tap into this high but we have nothing over here to go to and NASDAQ is just continuing to fall, that is very low probability that we want to continue higher. So at that point, I would probably not be looking to take a trade at that point. I would be very concerned, to say. And not only that, one thing that I'd also be looking to see if we want to go higher still is looking for a change in state of delivery on NASDAQ. And now if we're putting in the low of the day on NASDAQ, I would also need to see a second change in state of delivery on NASDAQ to then go higher. Now, this might be a little bit confusing, but you see how there's multiple if this then that situations. Having multiple filters allows you to stay out of trades that wouldn't otherwise work out well. And I think that's the biggest thing that will make a difference, because I understand the model. I understand what I need to do. but I think I just need to do more filtering to make sure I'm staying out of bad trades and only taking high probability trades. Now, my stats here are very bad. I had no business being in a lot of these trades, and that's just something I've recognized getting up until this point. Is the reason why I took these trades was just because of really bad filtering. I didn't know that I shouldn't have been doing some things that I was doing, but now I'm learning and trying to correct that mistake. This trading method, I do think it's great because it allows you to trade like any year, any day, any month. And it's not a pattern trading system. It's literally just understanding the logic of the market. And so I do like it, but I'm not going to lie, it is kind of complicated. It's not easy. Like, it's really not easy. But I think once I get better at filtering, hopefully I can get some better results. But with that being said, if you have any comments, leave them down below. Don't forget to like and subscribe, and I will see you in the next one. Peace.